Welcome everyone to the Real Money Show. The number 18778 silver and the website guildhallwealth.com. That's the number. That's the website to learn about holding physical gold and silver in your portfolio. As we speak, silver has broken $38 an ounce in US dollars. The ratio continues to fall, although still at very elevated levels, let's be honest, and gold is trading in a range right now around 33.40. But it has really the story this week is the silver price, the silver lease rates, the silver shorting, and we're going to get into all of that. My name is Jeremy Wiseman. I'm joined by Jerry Correia. Jerry, how was your week?
The week that was, a lot of news coming down the pike. So many things happening, especially in the silver market. Got that new report that Nomi Prinz and John Rubino talked about off the desk of Jesse Colombo's bubble report. We're going to post that on Twitter, and our newsletter will be launching that as well. We're going to get into that and some of the technical stuff that he talks about. Some great charts, but a lot of news brewing in the silver market.
Yeah, a lot going on. Let's start with just putting a frame around things, knowing that there is a deficit of what's coming out of the ground and what is being used, not necessarily for investment, but for EV things, for the new economy, right? All the technologies. They're not mining enough silver, and there's a deficit. So then, last week, there was a massive sell-off, apparently, in the precious metals market, or at least an attempt to sell off, with close to 500 million ounces. They tried to sell off, and oftentimes it's reported that this is to try to get the price down, right? Mm-hmm. You try to sell off a lot of metal. It's going to give you a spark of signals. People are going to say, I don't like where this is going. It's going to trigger algo trading, and it should push the market down. Now, at the same time, we're seeing that lease rates to get the physical metal, meaning the bullion banks are charging a higher rate if you want to borrow the metal. Now that's typically a sign of silver scarcity, mm-hmm. and the market looks to be in the midst of a short squeeze. That the pullback didn't happen, the shorts are caught. They're now caught having to cover. They can't get the metal.
Yeah.
They're having to buy it at higher rates. Can you walk us through this a little bit?
So the shorts happened. So in Jesse Colombo's report, he briefly writes at the very beginning, while gold soared over the past year, silver was lagging, held back by a couple resistance levels, $32, $33, $1 levels, which stopped multiple breakout attempts. But then it changed, especially from last Friday when the surge finally arrived and the silver market surged forward 4.5% up to the doorstep of $39 really, really quickly. And that is a risk to the short positions. Now, why are they shorting, Jeremy? We can speculate, making money perhaps, but the way I think, the contrarian in me, it's to dissuade someone from buying, it's dissuade investors' demand to maybe move away from that market. It's a fear thing. If you see the market moving down rapidly, $1 to $2, as we saw years ago, it would stick. The shorts would work, and the silver market would be held back. But as you mentioned at the start of the show, we're back to $38. It didn't really work that well,
right.
And it's showing that the demand, especially you mentioned the silver lease rates, it's a clear signal of stress in the physical market. You can't find the silver. It's really not about price. It's about the trust in the system. If the silver was there, why is it suddenly so expensive to borrow?
What happened? I thought they had all the silver from earlier in the year when there was the tariff talk. Remember they had that gentleman, we covered it from TD, talking about, the tariffs are, having people take delivery from the LBMA and bringing it over to the U.S. So isn't there, the product was there, they took delivery of it, or are you saying it went into private hands?
All we have noticed, that was according to TD Securities, Galley, he mentioned that silver supplies are dangerously low, and the amount of freely available silver in London is at its lowest level on records. And we've just been following the pattern. We've noticed silver just sloshing from one side to the other side, the same inventory. It's not a doubling up, or it's not your inventory and my inventory. We're sort of sharing the same inventory here.
So to your point, you talked about, the reason for suppression, and I agree. I don't think I don't necessarily have to believe it's some big conspiracy. Having been in the business long enough, you could even just guess at how much money can be made shorting the market and keeping it in a range. So for me, if I were to just say from a practical standpoint, there's a lot of money being made to keep it in a range, and for years, and then you kind of say, well, now you know why JP Morgan stock keeps going up. But all good things come to an end. Mm-hmm. And are you saying that the sloshing is over? So what's happening right now in the market could be a direct effect of what we saw earlier in the year when they took delivery of the product back in, February?
Well, we just follow the lease rates. That's why the lease rates are so important to follow, because rising lease rates precede the violent price squeezes, just like platinum saw before its massive rally this year. Platinum is now outperforming palladium, something relatively new. It's still lagging behind gold, but going back to the shorting, seeing that just as of yesterday, the inability to short the SLV. You can't borrow the SLV anymore. There's no longer any shares.
Whoa, say that again.
Yeah, there is an inability as of yesterday. There was a post by, I think it was one of the silver analysts. He mentioned that it means the pool of lendable shares is exhausted as of yesterday. This demand for shorting, coupled with no supply of borrowable shares, suggests that short sellers can no longer easily add to their short positions, reducing downward pressure on the SLV price. So it's an onslaught. It's who needs to short silver? Why is silver the most shorted commodity in the world? To me, you put back on that tinfoil hat, and you look back on the users. The largest user, the Silver's User Association, the lobby that suggested to remove the silver out of coinage to Lyndon B. Johnson back in the 60s, it was the military. So the military, the largest user, needs that silver. They stopped reporting earlier in the 2000s the silver stockpiles because their stockpiles were short. So there is a reason why silver is shorted. This is a silver war that we have going on, and if you have the physical in your hand, you're a winner.
The number 18778-SILVER, the website guildhallwealth.com. Let's go wider perspective here.
Yeah.
It's not just about silver. It's about all the metals, critical metals. We know, we've covered on this show that China's been pulling physical silver out of Peru. They'll refine it themselves. There reports Vince Lancy mentioned it this week on one of his things, one of his podcasts, that they get it directly from Mexico as well. China does. So it's not just silver; it's all metals. But I think what makes this a perfect storm is that silver has been the most shorted market, and so it's the most susceptible to a massive squeeze.
It was,
right, and we've already seen the market move really well this year. Watching it move in December, they got it back below 30. So from December till now, we're up $8. It's a very good move in the market. I was listening to Michael Oliver on the the Liberty. Yep. What was that report? The Liberty report.
Liberty report.
Liberty and something report.
Or is that Ron Paul's?
No, his is the Liberty report. We'll put it in the description in our YouTube. Finance and Liberty report. That's what it is. And he is a momentum guy, so he tracks all momentum, and he's been excited about the metals for a long time. He was particularly excited about silver, suggesting that it has moved into the momentum. We've broken above key levels, and so he sees momentum now. And he was maybe you can remind me, because I always run into what happens, just so everybody knows, what'll happen is I'll listen to one of these things, and I'll come in the morning, and I'll run into Jerry's office and say, Jerry, so I was listening to this, and this is what they were saying. So he doesn't have to listen to anything. give him the Coles notes. But he was suggesting the price could go well higher this year.
Yeah.
By the end of the year. So he was excited. That got me excited. I think people should be excited. And I think that if you think that you've missed it,
no,
you have not missed it.
No, it's exactly what Jesse Colombo wrote. This is the move to $39 an ounce was a very positive development, signaling that silver's bull market is just getting underway. With this strong momentum, silver's likely to make a rapid run past 40 next, and then 50 soon after. When you break 50, that's when the exit velocity hits, and it's silver like a hot knife through butter, continuing through. We think dollar moves are the resistance. It'll be 10 in the 10 zone, a $10 move, a $10 move, and we'll be, before you know it, we'll be in the triple digit zone.
And it's one of those things. It's harder to go from 10 to 20, but to go from 50 to 60. Right?
Yep.
It's still a $10 move, but it's a lot easier to go from 50 to 60 or 60 to 70 than it was to go from 10 to 20. Mm-hmm. So anyone who's getting in today, there is the ability to easily make more money as the market's rising. And people are holding it because they want, for both gold and silver, they want the anchor within the financial storm. Things seem uncertain. There's a chaos feeling that's happening, and gold amongst central banks and silver amongst the people provides this anchor to let people be able to, as we've said, when things are uncertain, gold is certain, and it gives you that. So both gold and silver are providing that. Great to see these moves. We've got a lot more to come on The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. That's to get physical gold and silver in your portfolio. We help clients to have allocated, segregated accounts, even within registered accounts, so that your physical gold and silver is, yes, it's held within a registered account, but you own it, you can go touch it, and it's in a vault outside the banking system. How's that for safety? How's that for stability within a system that feels like there's chaos? The number 18778-SILVER and the website guildhallwealth.com. At Guildhall Wealth, we do help clients to have physical gold and silver in their registered accounts. So RSP, TFSA, Lira, LIF, RIF. It is one hell of a way to insulate your portfolio, and it's been very successful. Jerry, I had a client who was concerned about cost of doing business. Everybody's concerned about cost of doing business because here in the People's Republic of Canada, prices are getting more expensive. Taxes are going up. Insurance is going up. Everything's getting more expensive, and people are looking for ways to cut. Do I cut my Disney? Cut, where the cut's going to come from? I'm going to, maybe not go out for dinner as much and things like this. They could just lower taxes.
Exactly.
Nonetheless, so I had this client. He sent me an email, concerned about storage, and I took my time, and he's got a lot of accounts. There's like 5 accounts. His wife's account, an RSP, a Lira, a depository account. So it's like kind of all over the place. And then there's like 4 or 5 accounts. So the client put in overall within the last. Started late, like December 2024. Sorry, December 2023. The rest was put in throughout 2024. About $500,000. Mm-hmm. The account's worth over $750 at this point. Very close to. So the client's up like $230,000, give or take. The storage was about $6,000, right? And once we provided him the full amount, it put it into a big perspective. It was like, you know what? If I'm making $230,000, that's okay. And we were laughing about it. It was like, listen, if the market only went up 3% and you made $10,000 and you had to outlay $6,000, like I will sign up for the complaint department. I will ask for a job over there because they'll be very busy.
Yes.
But he was very, very happy in the end.
It's a common exercise that we have to do here.
Yeah. Look, there is a cost to own physical product. And you can do it cheaper, right? You can invest. You can invest in something where you don't own it, and it's cheaper.
Oh yeah,
right? You don't own any product, so what's there to pay for?
Go buy it at spot price.
They can have physical product stored for you, but you don't own it, so you're not going to go visit it. You can't take delivery of it. There's very low fees because they're 1,000-ounce bars and stuff like that, right? So, there's price, service, delivery. You can't get all three, but you also need to compare apples to apples. The point is the client was very happy, and the idea of perspective on debt is my point. I was listening to a panel discussion with all of our favorite analysts held by Danielle Cambone at the Rick Rule Symposium. And they were talking about, specifically it was Jim Rickards talking about the debt. And he was saying, look, yes, it's $37 trillion. That's not necessarily the number we're concerned about. It's the debt to GDP. It's at 130 plus percent debt to GDP. But if you can improve the economy enough, right? If you can get 3% growth, if you can get more oil so that oil's cheaper, energy's cheaper, and you can start to get interest rates down, maybe things like this, you can start to weave that number down. And he made an interesting point, which I didn't tell you before. He said, at the end of 1945, debt to GDP was like 115% after the war.
Right.
So the debt was larger than the economy. And over the next 30 years, the debts grew. Mm-hmm. But the debt to GDP went down significantly to the point that by the end of the 70s, I believe, or early 80s, or was it early 70s, around that time, over that decade, it was down to 30%. So debts could continue to grow.
And what's interesting,
but
during
the growth outgrew the debt.
Right.
So
no income tax,
yes,
tariffs, and no Federal Reserve.
Well,
the Federal Reserve was there.
Yeah, you're talking before the 20th century. So that was kind of interesting, just the idea here of putting debts into perspective.
That's right.
Right? But the panel was mixed on how that gets achieved in terms of down the road. They all agreed on a reset. They all agreed that the reset is a process and that central banks are going to continue to buy gold. There's no doubt about it. And that they're holding gold because they feel that things seem chaotic and they don't know how the path looks from here to there. Mm-hmm. So they all want to own gold. What do you make of that?
Well, that's what we're seeing. The markets are full of risks, full of bubbles. There's only the investors today and countries alike are seeking real trustworthy stores of value. And owning physical precious metals, gold and silver, physically, is that form of insurance. It has been for thousands of years. But gold, anytime we've seen resets, gold and silver have been that foundation of the reset. Not just a hedge. Yeah, you need that insurance policy, but you also want to position yourself for the reset. And we need a reset. That is the bottom line. The debt to GDP ratios are way off. The 37 trillion in debt, the 9 trillion that has to be renewed this year, the dumping of the treasuries because they're unbacked, they're fiat, just like the currencies. And then,
what was interesting, if I may sort of cut you off there, because in that panel that came up, the treasuries, and everyone was looked at it in a couple different ways. Most of the panel looked at it as de-dollarization, which we've discussed here, of course, right? Jim Rickards looked at it differently, actually. He said it's a cash problem. He said they need cash. These countries need cash. They need dollars. So they have to sell the treasuries. So it stands to reason that, yes, countries are selling treasuries, yes. But why is the reason?
Mm-hmm.
Some would say, oh, they're trying to de-dollarize, and others might say, no, they just need the money. Because it's
interesting,
right?
Mm-hmm.
I don't know. We'll have to. This is the point. Is there's different ways of viewing this potential reset, right? But where's the end of the road look like? And everyone agreed that gold was the throughway. It's like the bridge.
It is,
right? Because you could have stablecoins and cryptos and all of these things, and we've said this for years here. Yes, that is the future. Mm-hmm. That is the future, but gold is the bridge. Mm-hmm. How are you going to get there?
Yep. A great visual this week on the usdebtclock.org where it was revealed, a sort of the secret window talked about the bridging of the systems. You have the U.S. Treasury. The Federal Reserve is gone, replacing these mega banks with credit unions, and you're bridging this ecosystem with gold, the Treasury, and the blockchain, stablecoins. So this is, I think we're heading in the right direction with our trends that we've been following. The stablecoin research back in April, the U.S. Treasury Department was investigating on stablecoins. I think it's already a done deal, to be honest with you. And just looking at the risks associated not just with the treasuries being dumped, because that's the fabric of the United States, the treasury note, but also if we look at other risks in the market, within the crypto market, I think it has to be that stablecoin market. Jacob King this week on X said just in another $1 billion USDT Tether has just been printed out of thin air to artificially prop up the Bitcoin's price. That's now over $4 billion this week alone. He says Tether is going all in to pump the Ponzi before they get shut down by the regulators this week. The impending crash will be magnificent. Now the issue with that is
why is Tether pumping up Bitcoin? I know it's not. They're not a transparent company, right? But why is one connected to the other?
Well, because the world's largest stablecoin, Tether, is what people usually get into prior to buying Bitcoin.
Okay.
How they get there, we don't know. To me, if I put fiat into my crypto exchange, I'm going right into the crypto. I'm not going into Tether first. But Tether has been seen as this on-ramp to balloon the Bitcoin price and the Bitcoin market to offer the support. Now, if the stable coin is not actually what it says it's supposed to be, one-to-one backed by the U.S. Treasury, then we have a huge derivatives bubble about to pop.
Okay, so let me see if I've got this right. The idea of a stable coin is that you might be using Bitcoin, you might be using this currency or that currency. Like, let's say you had a US dollar for foreign trade, and then you had a domestic US dollar. Those could literally be two different coins, right? But to get to those coins, you might have what's called a stable coin. Tether purports to be a stable coin, but they're not regulated in any way. So we don't know how the money is getting into this stable coin in order to buy other cryptos.
That's right.
Did I get that?
Yeah, it's claimed to be backed by reserves of cash and treasuries, but it's never been fully audited. It's used by crypto traders in the markets as a proxy for cash, the US dollar, digital dollar. That's what it's supposed to be. Now, where is it? The Tether, Bitfinex, they're offshore in the US Virgin Islands. That's where they are. Some offices in Hong Kong. But what's interesting and why this is very relevant today is that audit. And the Genius Act that we're looking at, which Scott Besson tabled, which is supposed to be potentially ratified into law.
It's moving along.
Which stands for the Guiding and Establishing National Innovation for U.S. Stablecoins. If this passes, the point of it's to guide the U.S. And stablecoin issuers to maintain reserves on that one-for-one basis. So does this mean if they do audit, they will realize, hey, wait a minute, you're not one for one. So where are you at? What's the ratios? It all comes down to ratios, Jeremy.
Okay, so all of our listeners are saying, Jerry, what does this have to do with gold?
Well, gold and silver matter to the U.S. Treasury. It's going to be that trust anchor, especially if the U.S. Tether or the fiat stablecoins fail ultimately. Because if the revelation that these stable coins are not one-to-one backed, that could be that potential, what we call it, the black swan, that could potentially lead to this eruption, this blow up in the market. But it's also the black swan that could trigger the once unacceptable gold standard, because you need something to happen in order for something that is so hated. We talked about this for years of what there's so much resistance from Forbes magazines talking about gold standard. Who's going to get into the gold standard? No, you'll have to accept it because of the damage that this is causing, the balloons and the bubbles that are popping.
So what you're saying is ultimately, for transparency purposes, they use gold to back the coins in a transparent way, and that's what gives those coins, one, stability, and two, trust.
Mm-hmm. A fiat thing backed by fiat. I mean, it's just it needs backing, and that's the issue here.
You know, it seems in some ways that there's this kind of going backwards in a good way, right?
Yeah.
Trying to untether your way, if you will, to back to this kind of idea of a standard and stability. And we've been talking about states that have been doing that same thing. What does that mean for the precious metals going forward? We're going to talk about that in the next segment. The number 18778-SILVER, the website guildhallwealth.com. Physical precious metals is so important right now because there is no counterparty risk when you own physical precious metals. This is a volatile time. There is a lot of uncertainty, and whether or not we are headed to the golden age, whether or not it has arrived, there's still a lot of uncertainty about how these problems are going to be solved. And having physical gold and silver has already been a great place to anchor a portfolio because it's negatively correlated to the dollar. No matter what way we go in this direction, fiat currencies are not going to be gaining strength without having something backing them, like all of the critical minerals and gold and silver to back it. So when you think about the fact that dollars are devaluing all the time, your dollar doesn't go as far as it did a year ago, 5 years ago, 10 years ago. What can you do to hedge that? And gold and silver have done exactly that for you. And it will continue, in our belief, will continue to do that going forward. What we like to do here is bring you all of the analysts that are talking about why this is going to continue. And so if you believe taxes are going up and currencies are devaluing, you want to protect somehow. You want to have a hard asset that's negatively correlated to the dollar, and that is physical gold and physical silver. The number 18778-SILVER, the website guildhallwealth.com. Feel free to contact us. We'll show you how to get involved in the gold and silver market, specifically in registered accounts or directly. You know, Jerry, we talk to a lot of people. They want to, they're concerned about Canada. We have a lot of clients who have already left Canada, let's be honest. And there's a lot of others who are considering, moving elsewhere as well. We do have the ability to store physical gold and silver offshore in the Cayman Islands. So if it's something that you're seriously considering and you do want to store your product and have it offshore, maybe for a few years, maybe until you decide where things are going to land, we can help you with that. We can help you. We also have storage in Singapore and elsewhere, but we can definitely help you with that if that's something that you're looking into. Give us a call at 18778-SILVER and we can discuss it. Jerry, what's going on in India? You were mentioning in the break that you had a big story there.
I thought this was a big piece. I posted on the X yesterday. The headline came out, and I had to take a double take. So the headline said, the Securities Exchange Board of India, SEBI, mulls using domestic spot bullion rates to ascertain the value of gold and silver, their gold and silver ETFs, moving away from the London prices. So this is massive because this is going in line with the price, the 86-cent price disconnect in silver that we saw last week between London and New York. So therefore, a market as big as India with the Indian Bullion Exchange, one of the biggest silver exchanges in the world, they have the physical to back up. Does COMEX and does the LBMA have enough product to back up their prices, their contracts, their deliveries? Maybe not.
Oh.
We see right through it. So
he who owns the gold makes the rules.
This is a big move. India is making moves to ditch the paper COMEX and the LBMA. Spot pricing for gold and silver, it's being shifted. This is, to me, a true price discovery happening. It's underway. Repricing ahead potentially, but this is a one good move because he who has the gold makes the rules. Goodbye paper games. The paper games are up, and this will empower those who mine the gold and the silver globally. For far too long, costs, as we saw, the beige book came out, the Fed's big beige book came out yesterday. Stagflation is here. Profit margins are down. How can you maintain profits if your expenses for everything is going up and you don't want to pass on the increases to the customer? well, you're going to slowly see things drift sideways or downwards. So we're going to see true value for the mining countries, going back to the people. And I think true price discovery is underway. And this headline speaks volumes to me for sure.
So true prices on the way. We've always said that gold and silver are still undervalued, especially when you look at the debts and compare them to them. But moving forward, we've discussed on the show and reported on states that are making gold and silver legal tender. And Florida just did that recently. And interesting, I was talking about that that panel discussion I was watching on the Rick Rule Symposium. And they were saying, in China, they encourage people to buy gold. In the U.S., they do it by legalizing it.
Yes.
So if you think about that, the idea that Florida is legalizing it, meaning to a point where you'll basically be able to buy a house with your kilo bars of gold. What that's also saying is, I want to own gold. I want to own silver. And, while the consumer market is tapped out, let's be honest, and they're selling physical gold at places like Costco, there, I believe, is a pathway there that as the economy improves, people are going to want to own more and more gold. And this is not unfounded that the economy can improve and prices of gold and silver also move higher.
Move higher as well. Yeah, because, this is all about your balance sheet, right? Your growth on the asset side of your balance sheet. It starts to strengthen, and as demand goes, as money sloshes out of risky assets and into the finite gold and the silver market, we are heading into territories that we have never seen. What could be the fuse? It's either, we were talking about, we're seeing news that Powell may be fired or he may quit, walk away. But we do know for sure that the next pick, whoever that will be, doing like subtle votes on Twitter, that it could be Judy Shelton, who knows? But they're going to be slashing interest rates, and that to me is going to be the
maybe
push
not.
higher.
Maybe not. Listen, Jim Rickards was on fire, man, on that symposium, and he was saying that during the transition team, he spoke to the team about Powell. They want to box in the Fed. No one likes the Fed, but right now, this is Jim Rickards. He was saying Jerome Powell's a great punching bag. Mm-hmm. They might not want interest rates to go down, but they can blame him for the economy, and they just got the Supreme Court to rule that he can't be fired. So what they have, in effect, if you want to follow a certain narrative, a different type of narrative, you could say, oh, you know what they got? They just had it like a solid, by law, a punching bag who's going to be sitting there for the next year plus, that they can just say, see, this is why the economy sucks. Meanwhile, on the other side, they keep doing deals, keep lowering taxes, keep creating incentives and rebates and all of these things. And a year from now, when someone's paid off a lot more of their student loans, for instance, they could be in a much better shape a year from now. And maybe they need the rate cut, maybe they don't. Mm-hmm. Okay? But, let's see where things go in the next year. But in the meantime, why fire the guy if you can keep blaming him?
He's definitely that punching bag that they need, but I think the bigger risk is that $9 trillion in debt, because if they don't act on that, the ratings agencies for the U.S. credit rating will get slashed like they normally do when they don't handle their debts properly or prudently. So I think that $9 trillion rollover has to happen at lower rates. Otherwise, you'll lose your credit rating. But no matter what happens, the currency for the saver gets diminished. And just as a reminder, I think this came out from Alistair MacLeod today. He wrote an old Joseph Stalin quote from 1919, where Stalin said, "There is no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction and does it in a manner which no man in a million is able to diagnose." And the whole purpose of this Real Money show is to talk about what real money is, to get your hands on real money. Divisible, portable, durable, recognizable, and scarce. And number one, Jeremy, it is intrinsic. So our inspiration is just that, to understand that our currencies are being debauched, are being devalued, they're being destroyed by stealth, but no longer. People are seeing this happen, and the way to get out is to convert out of fiat into ounces.
The number 18778 silver, the website guildhallwealth.com to get physical into your portfolio. You can buy it direct. You can buy it and store it fully allocated, segregated in a vault, ease of liquidity, and take delivery anytime, go visit anytime. Obviously, we'll help you schedule that, or have it in a registered account, fully allocated, segregated, held in a vault outside the banking system. The number 18778 silver, the website guildhallwealth.com. If you missed a show, catch us on YouTube, catch us on Rumble, or follow us on X. Jerry, we both sold diamonds this week. Let's talk a little bit about that. Why did your client buy a diamond this week?
Yeah, congratulations to the buyers this week. 100% great job. Very cognizant of the currency situation and the fact that, you know, when they do start simulating or cutting interest rates, money tends to flow back into hard assets, including natural fancy colored diamonds. So this particular couple inherited some funds and thought initially that they couldn't afford a Guildhall diamond. We talked about this over the radio for the many years, came to a few seminars, but ultimately thought they couldn't afford it. Well, I showed them a diamond that they could, that fit their, that was perfectly tailored for their gold and silver portfolio. They already have gold and silver, but they wanted to round off with a natural fancy color diamond.
So that diamond, what percentage of their portfolio did that end up representing?
This, I believe, will represent, if I'm not mistaken, about 5%, 4 or 5% of their portfolio when I put it into the report. So, yeah, it's a beautiful 1.22 carat fancy intense yellow, internally flawless cushion cut, and it's a Guildhall natural fancy color diamond. It offers a rare, low correlation asset to your hard asset portfolio, and they're beautiful. They hold their value when the currencies are going upside down during crises, and since 2002 they've been trusted go-tos for people who are looking to protect their wealth, and they're going to be using the wealth to wear line.
Okay, I was going to just ask, are they keeping it loose, or are they thinking of a jewelry?
Yeah, they're going to be putting it into a ring. So I got in contact with our guy, our designer, and we're currently putting together some drafts. So it's an exciting process. Should be done in about a week or two.
Nice for them. How long are they looking to hold that? I mean, obviously, if they're putting it into a ring, they're probably thinking long term. But
it was a beautiful story. Like they've been married for a while, and he wasn't able to buy her a ring. So this is going to be their wedding ring. That represents. And then for yourself, you also sold a diamond. Congrats to the people and the clients. Tell me about that.
Yeah, they similar.
Yeah.
This is an engagement.
Oh, okay. Nice.
So they've followed the color diamond market for a while and watched, you know, the type of diamonds that we have as Guildhall diamonds, and they sort of knew right away that that's what they were going to do. And also, we just so happened to have one of the diamonds already set. And in this case, you know, they were eyeing that particular design for a while. So it was pretty easy decision for them in that respect. And, you know, what I always find interesting in that respect is that to get an investment grade natural fancy colored diamond, like an intense, internally flawless, which are very difficult to find overall, is if you're not going to a big box store where you're having to pay retail for and all of those things, a diamond like this can actually be more economical route than going big box.
Oh, yes.
And you end up with something that is
no comparison.
Infinitely more rare, right? And more special. And your relationship is special, right? And stories matter. And it's nice to know when you have something like that, that in 10 years, it will still be worth, you know, against the retail stuff, it's only going to continue to move higher. So
Right.
I think overall, it's nice from the romantic side of things. It's nice from the rarity side of things. And it's nice to know that this asset is also going to continue to move up in value. Look, at the end of the day, got to be honest, we get phone calls. I've got this diamond. You know, I got it from my grandmother. Here's the specs. And you go, I mean, I'm sure it's got memories and value in that respect, but it
doesn't fit our criteria.
A white diamond, a lot of the time, doesn't have the same secondary market side of things. So congratulations.
Request the guide and contact us to book your own diamond discovery session today, which will show you how a natural fancy color diamond can not only complement your hard asset portfolio, but help you protect and insulate further from crises, insulate and disconnect from any counterparty. This is your money, and we want to show you how to grow this side of your portfolio.
And of course, gold and silver have been moving very well this year. Silver in particular, right through the summer. I thought it was supposed to be quiet, but for some reason, here we are mid-July, and silver's going crazy. Is it the short squeeze, the event that everyone's been waiting for? I mean, at this point in time, certainly looks like it. Smells like a duck and looks like a duck and is walking like a duck, and it feels like this could be that move. So if you've been thinking about getting involved, particularly in the silver market, this might be the perfect time to step into the market. I certainly personally wouldn't be waiting to get some sort of big pullback to try to enter this market at this time. I'd rather crawl, walk, run into the market in that respect, so you get a feel for how it goes. So that's it. That's the show. Thank you so much for listening. Thank you for joining. If you've missed a show, catch us on YouTube, catch us on Rumble, also on Spotify. Follow us on X. Jerry, thank you so much. And can't wait to speak to you all next week here on The Real Money Show on 640 Toronto.